Hello everyone, and welcome to For Example. In this video, we're going to discuss the foreign exchange market. Now, granted, most of you will have some experience trading Forex, so you'll know a bit about how the market works. However, the purpose of this video is to reframe how you view the markets. We're not simply going to look at it from the perspective of harmonic patterns or flag patterns or support and resistance, but instead understand the who and why behind the market so that you can know every market move. Now let's get into the video. So the foreign exchange market is a global, decentralized, and over-the-counter market for trading currencies. This market determines foreign exchange rates for every currency. It includes all aspects of buying and selling currencies at the same time. In terms of trading volume, it's the largest market in the world. It supersedes the stock market. It supersedes the crypto market. The main participants in the market are large international banks, also known as banks and financial institutions, or BFIs. The financial centers around the world function as anchors of trading between a wide range of multiple types of buyers and sellers around the clock, with the exception of weekends. So the foreign exchange market works 24/5, not 24/7. Since currencies are always traded in pairs, the foreign exchange market does not set a currency's absolute value, but bases the value of the currency dependent on the alternative currency. For example, Euro US dollar, Sterling US dollar Japanese yen, Aussie dollar, New Zealand dollar, etc., etc. So the foreign exchange market works through these financial institutions, these BFIs, and operates at several levels. Behind the scenes, what banks are doing is they're turning to smaller numbers of financial firms who are known as the dealers, and they get involved in actually executing the trades on the bank's behalf. So most foreign exchange dealers are banks. So the behind the scenes market is sometimes called the interbank market because it's almost like banks talking to themselves in terms of execution. Now, the trades between foreign exchange dealers can be very, very large. We're talking billions and billions of dollars, involving hundreds of millions of dollars, hundreds of millions to billions of dollars. Because of the sovereignty of each currency and the fact that each currency is obviously depicted by its own economy, its own country, there is very little supervisory, there's very little regulation around Forex in general, because it's very difficult to globally adhere to one regulatory practice when each economy is very, very different. And each economy brings it with itself its own complexities, its own natures of trading, its own customs, etc., etc. So the foreign exchange market is split into three sessions. You've got the Asian session, the London session, and the New York session. These are the main sessions that are running 24 hours a day, each at 8 hours each, and they rotate around the clock. Okay, so you'll see on your screens now the different banks who own their percent. So you'll see on your screens now the different banks that own different market share with regards to the foreign exchange market. Now we've got JP Morgan at the top, who owns 10.78%, UBS, XTX Markets, Deutsche Bank, Citi, HSBC, Jump Trading, Goldman Sachs, State Street Corporation, and Bank of America Merrill Lynch. Some of those names you would have definitely heard of. Others you may not have heard of. And that's purely because they probably within themselves are entities that are trading that, again, relate back to that interbank market that I was referring to earlier. Now, why is this important? The flag that we can see most represented on this list of top 10 in terms of the foreign exchange market share is, of course, the US. So in the United States of America, the largest trading currency pair across the whole of the foreign exchange market is the US dollar. And the US dollar exchange is pegged to many currencies around the world. So many currencies peg their particular currency to the relative strength of the US dollar. Why is that? So that trade is easier to be had with the US, obviously the US being the largest economy in the world. What happens is when companies and countries decide to trade and decide that they want to export their goods or import their goods, by pegging their currency to the US dollar, they're able to get a fair value understanding of how much money they're going to make off of each deal that is represented in each exchange. So again, when we're looking at the foreign exchange market, we really want to be understanding what's happening behind the scenes and not just seeing it as a mere means to make money or as a mere means just to be able to, see a pattern or see some type of support, resistance, whatever it may be, but really understand what sits behind this market and why it's operating and why it's moving the way that it's moving. So given the fact that the US dollar is the largest traded currency in the Forex foreign exchange market, that is telling us something, right? That's indicating us that this is actually a currency pair that we should be interested in, because that means there's going to be a lot of volume. That means there's going to be a lot of movement happening. If the largest currency pair is being traded, then you're going to typically see a lot of volume moving into the market, which is subsequently going to bring with it a lot of movement that we see then represented on the charts that you can see in front of you right here. Okay. So that's to give you an understanding of the background of the foreign exchange market. Again, just so that you understand that what we are dealing with is the world's largest financial market. Okay, I want to reframe the way that you're looking at this market. It is not simply just a chart that you go on and you see. It's literally the market that governs the entire world and how everything moves. Okay. Now, with that being said, let's get more into about how these markets move. So you heard me say earlier that the price of a currency in the foreign exchange market is not given in absolute terms, but instead it's given in the price that is relative to another currency pair. So for example, let's take Euro USD. If we look at the numbers to the right of the screen, okay, just right here, we will see that the current price of how these two currencies compare. So currently we have 1.07823. What does that mean? That means that if you were to go to the Bureau de Change, or you were to go on holiday or vacation, anything like that, then when you exchange your euro, you would get 1.07 US dollars. Okay. 1 euro would get you 1.07809, 10, 14 now dollars. Okay. Now, in order for me to buy US dollar, of course, what am I doing? I'm having to sell my euro. So I want you to make note of that and remember that for a moment. I'll say it again. You will have to sell your euro in order to buy US dollar. So the simultaneous selling and buying is taking place in this exchange. Okay. The simultaneous selling and buying has to take place in order for the exchange to happen. That simultaneous selling and buying that takes place in the FX market, when you go on vacation, you go to the Bureau de Change, is the exact way the BFIs enter the market. They buy and they sell at the same time. Now, this is very key. Pause the video if you need to, because this is going to form a solid foundation for how we interact with the markets as traders. BFIs buy and sell at the same time. In other words, what goes up must come down. When we buy, the market moves up, and when we sell, the market comes down. So we can see that depicted here. When we buy, okay. Now, with that being said, let's look more into these markets and understand how they work. So you heard me say earlier that the price of the... now, with that being said, let's get into Now, with that being said, let's get more into these markets and how they move. So you heard me say earlier that the price of a currency in the foreign exchange market is not given in its... there you are. Now you want to show up, huh? Now, with that being said, let's get into these markets and how exactly they move. So you heard me say earlier that the price of a currency in the foreign exchange market is not given in its absolute terms, but instead given in a price that is relative to another currency pair. So for example, if we look to the right of our screen, we can see the number 1.077798, and that's going to continually fluctuate. Okay. What that's telling us is that's the current price point of how these two currencies compare. So we are on Euro US dollar. So the euro to the US dollar is comparative at a price of 1.0779242, however that wants to move in current real time. What does that mean? That means for every €1 that you present, you could get $1.07800. Okay, that means €1 will be able to get you that amount of dollars. Now, in order for me to buy US dollar, I would have to sell my euro, just like you would when you go to the Bureau de Change before going on vacation. You literally have to sell your euro in order to obtain the US dollar. So I want you to make note of that and remember that for a moment. You sell your euro and you buy US dollar. So there's a simultaneous selling and buying that is taking place in the exchange. Now, the way you interact with the foreign exchange market by selling your euro to obtain your US dollar, in order to buy your US dollar, is the exact way that banks and financial institutions enter the market. They buy and they sell at the same time. Now, this is very key. Pause the video if you need to, rewind, because this is going to form a very solid foundation for how we interact with the market as traders. So banks and financial institutions buy and sell at the same time. In other words, what goes up must come down. For every buy, there must be an equal and opposite sell, such that the market moves in the way that it needs to move. So for example, if we look at this particular chart here, we can see price moving upwards. All right. So the market overall is in a buy price delivery, bullish price delivery. And then as we're pulling back, we know that this is a sell. Okay, this is selling price delivery because price is moving downwards, and now price is now, of course, moving bullish. Right, so that interaction of buying and selling at the same time is happening across all different time frames. And it's really important that we understand this so that we can know how to execute and enter into the market as traders. Because if we're entering into the market as a consumer from a buying and selling perspective, and the BFIs are entering into the market as market movers from a buying and selling perspective, then we too ought to enter into the market as traders from a buying and selling perspective. So what does that look like? So when the BFIs enter into the market, they typically do two things. They create liquidity, all right, because the market has to move on liquidity, and liquidity is just simply known as money. Okay, so liquidity is money. So they create liquidity, and also what they do is they sell to buy and they buy to sell. All right, those are the two things that the market movers do in order to keep the foreign exchange market moving in the way that it does. All right, they create liquidity, which is equal to money, and they sell to buy and buy to sell. Now, what does a sell to buy and buy to sell mean? See this aggressive push down of price right here? Yeah, you see that? That is what we know as supply. Supply is overpowering demand because supply is pushing price down. Then, equally, we get this push up in price. All right, and that is where demand is overpowering supply. So they sell price down to then buy it higher. We can see that take place in multiple places across the charts. Then we'll mark out all the sell to buys that we can just see here. Then we'll mark out the buys themselves. All right. So notice that this is trend delivery. This is typically what you understand as a market trend. Okay. But it's again reframing how we're looking at it. Banks are selling down to buy higher, selling down to buy higher, selling down aggressively to now buy higher. Notice that this is what is creating that low, high, higher low, higher high, so on and so forth. Now, trends don't move the same way as conceptually they do. All right. So just because we understand it as a concept doesn't mean that it has to work out in the actual markets in that way. But we're essentially selling to buy, selling to buy, selling to buy. And this is how markets move. Now, on the flip side, what do they do as well? Well, BFIs buy to sell. Again, they buy to then sell. We can even include this from a higher time frame perspective. All right. So they are buying to sell, buying to sell, buying to sell, buying to sell, buying to then what would happen after this? Typically, we would see some sort of sell action, however that plays out. All right. So that selling to buy that we've talked about before is on the flip side a buy to sell. Sell to buy to sell, sell to buy to sell, sell to buy to sell, so on and so forth, right? And that's how we continue throughout the market. Now, this is really important because when it comes down to the rest of the concepts that we're going to go through throughout the course, you're going to see why the observing the buy to sells that the BFIs execute and also having an eye. So now this is really important because you're going to see as we go through this course why it is important for us to observe how these banks enter into the market by selling and buying at the same time. And you'll see why it's so important for us to have an eye for both sides, because if the BFIs are selling and buying at the same time, and we want to trade like the BFIs, then what should we all do? Buy and sell. Not always, not in every circumstance, okay? As you go through the course, you'll understand, and as you go through your observations, you'll understand how to observe and why it's so important to observe and then execute based on how the trade that you like to take. But as a foundation, we must observe them buying and selling at the same time. So that's the first video for you guys, just to give you an intro into the foreign exchange market. Again, reframing how you've looked at the foreign exchange market in the past, seeing it maybe as just lines that need patterns adopted onto them, or seeing them as a mess. Maybe you've seen them as a mess and not been able to really understand what's happening in the foreign exchange market. Instead, hopefully this video has helped you to understand the why and the who behind the market, so that you can then understand every market move, so that we understand that it is not just simply a case of coming to the charts and pressing buy and sell, but it's understanding the story behind how these charts are created, why they're created the way they are, who's orchestrating the moves, why are they orchestrating the moves. And if they're the people who are the market movers and orchestrating these moves, then we need to be able to think like them in order to trade like them, in order to win big like them. All right. So that's the sequence that we're following when we're going through these sessions. We're following the sequence of BFIs, trading like the BFIs, understanding their intentions for the market, understanding where they want to move the market next based on who they are and what they're trying to achieve, such that we can get in on those trades and not become like retail traders who are taken out by BFIs and who are stopped out. And probably many of you in your journey have had experiences of being stopped out. Probably many of you have lost a lot of money being stopped out and not realizing why you're being stopped out by a few weeks and the rest of it. This course is going to take you through the process of why that is, so that you can get on the right side of the market, those that move the market, and that you can continue in your journey of being a successful, self-sufficient trader. All right. That being said, thank you so much for watching this video. Hope it helped. Go back over it if you need to, refer back to your resources. Any questions you have, feel free to drop them in the Discord, and I will catch you in the next one.